Hello everyone, my name is Anjali Kumar Khetan. I am based out of Bangalore, and in this video, as I promised in the last one, that we will conclude the prior period related stuff, and then we will complete the entire circle by looking at what is the option which the directors or the entity has under section 131 of the Companies Act 2013, which allows for voluntary revision of financial statements or the board report to the entity. Okay, let us see what this requirement is all about, and this will complete the full circle with what we started a few weeks back. So let us first see section 131 of the Companies Act 2013, which deals with voluntary revision. Now, from a legal framework perspective, what you need to look at, not only the section 131, but also Rule 77 of NCLT Rules 2016. So you have to read the section 131 read with Rule 77 of NCLT Rules 2016. Now let us first see what the legal framework is, what the law requires you to do in case of voluntary revision. So subsection 1 of section 131, if you just try to dissect it, I've just given the bullet point so that the essence is understood. So what this subsection says is that if it appears to the board of directors, if the directors, they believe that the directors of the company believe that the financial statements or the board report, the director's report of the company do not comply with the requirements and the provisions of section 129 and section 134 of the Companies Act, then in that case, these directors are permitted to prepare the revised financial statement or the revised board report as the case may be, which is not in compliance with the provisions of section 129 or 134. Okay, in respect of this, revision can be done in respect of any of the last 3 financial years. Now, you might already be aware, this section 129, it deals with financial statements, and section 134 deals with preparation of the board report. So essentially, subsection 1 of section 131 of the Companies Act 2013, it says that if the directors are of the view that the financial statement or the board report does not meet the requirement, the compliance requirement of these 2 sections, then they are permitted to revise, provided that it is for any of the preceding 3 years. However, it is not that this is an unfettered right. There are a lot of additional requirement and guidance, and that's exactly what we will look at it. Now, to summarize, let us say if you are in 24-25. Now, this subsection 1 says that if there is a problem in any of these 3 years, prior 3 years, whether in the financial statements or in the board report, which is not in compliance with these 2 sections, then this is the period 21-22, in this case 21-22 through 23-24. For any of these prior 3 periods, the board, the directors are authorized, they are allowed to revise the financial statement or the board report as the case may be, subject to other guidances. That is something which we will see in this video. First thing is, yes, they are permitted. However, if you see the second box, however, this revision can be done, which is permitted under subsection 1, only after obtaining the approval of the tribunal, which is the NCLT. The tribunal has to give the approval for such revision. And when it will happen? Even before the tribunal looks at the case and gives the approval, entity needs to file an application. So the directors need to file an application with NCLT. The application has to be made in the prescribed form and in the prescribed manner. So what are the forms? So basically form number NCLT 1 along with the attachments which are given or required as per NCLT form number 2. So NCLT form number 1, form number 2 is the format in which the application for such revision has to be made by the directors of the company, And that application, this application in the prescribed form must be done within 14 days of the decision by the board. So if the board has taken a decision to go ahead with applying the requirements of this section 130.31.1 and they want to go to NCLT for the permission to revise the financial statements for any of these three periods, then within 14 days of the decision made by the board, the directors need to file the application with NCLT in form number NCLT 1 and NCLT 2. This is the first requirement. Now there are a lot of other requirements which is given in the proviso to section 131 itself. So, and of course, this section, section 131 has been made effective from a legal framework perspective from 1st of June 2016. Now, if you look at the proviso to section 131, one of the provisos to section 131 says that the NCLT, the tribunal, shall give, once the application is made by the directors, then tribunal will give a notice. They will issue a notice to the central government and to the income tax authorities. Right? So tribunal will give, will issue a notice, or it's like more an intimation to these two, central government and the income tax authorities, and so that they can make representation back to the tribunal. So they give a notice to these, and the tribunal shall take into consideration the representation or revert received from central government or the income tax authorities, which these two authorities make before passing any order under this section. So the proviso to section 131 says, yes, the company and directors can make application, but once the application is admitted by the tribunal, then it is the tribunal provides an opportunity to the central government and the income tax authorities to give their representation, and whatever their representation is there, that has to be appropriately dealt with by the tribunal before the tribunal passes order permitting or otherwise, permitting the revised financial statement or the board report. Now, also, such revised financial statement or the board report shall not be prepared or filed more than once in a financial year. This is another proviso to section 131. This is another one. So another requirement is, even if it is permitted, in a particular financial year, you should not be doing the revision more than once. So such revised financial statement or the revised board report shall not be prepared or filed more than once in a financial year. So in one particular financial year, only once you can do this revision. Further, this particular piece, I'll explain in the next slide, the way it is worded, this leads to interpretation issues. This is something I'll explain to you. Why it creates an interpretation issue. Now, if you move forward, proviso to section 131 also read with the rule 77 sub rule 6. It says that if the tribunal has passed the order, then a certified copy of the order passed by the NCLT, the tribunal, shall be filed with the Registrar of Companies, MCA, within 30 days from the receipt of the order from the tribunal. This is the requirement which is triggered in subsection 1, read with Rule 77, sub Rule 6 of NCLT Rules 2016. So, once the tribunal has passed the order, certified copy of that has to be filed also with the MCA, Registrar of Companies, within 30 days of receipt of the order. Now, interesting point is another proviso, another piece in the proviso to section 131 says that if the revision is being accomplished, revision is being made by the entity, either for the financial statement or for the board report, a detailed reasons why these revisions are being done, detailed reasons for the revision of such financial statement or the board report shall also be disclosed in the board report in the relevant financial year in which such revision is being made. So, for example, if this is the year in which, let us say, you are making revision to this 22-23 financial statements. Then the board report of this 24-25, if you look at the proviso to section 131, it says that in this year's board report, you have to give a detailed reason why you actually required the revision of the financial statements or the board report of 22-23. This is another clarification or explanation given in proviso to section 130. Now, another important piece which we need to look at. Yes, if the revision is permitted, what type of revision you can do? What is the extent of permission? What is the extent of revision which is permitted? So what is the permissible revision? This is dealt with in subsection 2 of section 131. So this I will again detail. I'm covering it now. And in one of the other slide, I will give you how you need to interpret this particular section as well. So if you look at subsection 2 of section 131 says, if the financial statements or the board report have already been sent out to the shareholders, to the members, or delivered to the registrar of companies, or is led before the company in the general meeting for approval, then in these three scenarios, the extent of revision is permissible and confined only to the correction arising from these two sections non-compliance. So you can't incorporate new information, new disclosures, nothing. So in a scenario of where these previously issued this previous financial statement or the board report is already sent to the members, or is delivered to the registrar, or is led before the company in the general meeting, then the revision should be restricted to only those corrections which are required so that you are now in compliance with section 129 and section 134, which you were not complying with. You discovered as a directors that yes, there is a problem you are not complying with, and therefore your compliance, your revision should be restricted to only correcting the non-compliance and any consequential changes. I'll explain this one more time when we go in the subsequent slide, and I'll give more insights on this particular aspect. Moving forward. So this is what the section 131, subsection 1, subsection 2, along with the proviso to section 131 says. Now, let us also look at some of the key procedural requirements, okay, in this case. So, what Rule 77 Sub-Rule 2 says, okay, is that if the entity is going for the revision under section 131, then in case where majority of the directors of the company or the auditor of the company has been changed immediately before the decision is taken by the board to apply for voluntary revision under section 131, then the company shall disclose such facts in the application to the NCLT which you are filing in the NCLT Form 1 and Form 2. So what this rule tells you. So for example, if the board has taken a decision here now that they want to apply for revision, voluntary revision under section 131, then what this sub-rule 2 of Rule 77 says that if you have taken the decision here and there has been the majority of the directors have changed immediately before that, or the auditor have changed immediately before that, then this fact that majority of the directors or the auditor of the company have changed, that need to be given in the information which we are, or the application which you are filing with the NCLT in the form NCLT 1 and 2, which you will be filing, that also need to contain this fact, as is given in Rule 2, Sub-Rule 2 of Rule 77. And Sub-Rule 4 of Rule 77 says the company shall advertise the fact that they intend to go for the voluntary revision, okay, in this at least 14 days before the date of hearing with the tribunal. Now, this is what one of the procedural requirement is there under Rule 77.2 and Rule 77.4. Now, Sub-Rule 5 also says if the present auditor is different, the tribunal will issue a notice and hear the auditor of the original financial statement. So, for example, if this was the original auditor, now we have seen if the auditor has changed And in place of this, a new auditor has come. Now this sub-rule 5 says that if the present auditor, this guy is different than this one who is outgoing auditor, then NCLT will issue a notice, and here the original, the auditor of the original financial statement. That means the notice will be issued to this original auditor, and this auditor can also be heard by NCLT before passing the order. So this is your previous auditor, this is a new auditor, and in this scenario when the auditor has changed, the NCLT will issue notice to this auditor, and here the auditor who signed the original financial statement. Moving further, after considering the application which the directors have filed in the prescribed form NCLT 1 and 2, form number 1 and 2, and hearing the auditor and any other person as deemed appropriate by NCLT, the tribunal may pass an appropriate order in this matter under this section 131. Now, sub-rule 7 of Rule 77 says that on receipt of the approval, if the tribunal has given the order, it has given the go-ahead, okay, go ahead and do, then on receipt of the approval from the tribunal, the company and the directors need to call a general meeting. It is required to be called, and the notice of such general meeting, when the notice is being given for calling or convening that general meeting, then notice of such general meeting along with the reason for the change in the financial statements that may be published in the newspaper both in English and in vernacular language. This is required by sub-rule 7 of Rule 77. And also sub-rule 8, it says that in the general meeting which you are calling now, you have called for the general meeting. Now in this general meeting, the revised financial statement, the board report, etc. may be put up for consideration before the decision is taken. Of course, the tribunal has permitted, but the board wants to go ahead. But the general body meeting has to also adopt the revised financial statements, and therefore you are calling after the permission is obtained from the tribunal. You are calling a general body meeting, and in this general body meeting, you will be required to adopt the revised financial statement or the board report, as the case may be. This is given in sub-rule 8 of Rule 77. Also, on approval of the general meeting, once the general meeting has approved the revised financial statement, on approval of the general meeting, the revised financial statements, along with any auditor's report or the revised board report, as the case may be, shall be filed with whom? The registrar of companies, MCA. Okay, with the registrar of companies within 30 days of the date of approval by the general meeting. So the day the general meeting has approved this, 30 days from then, you have to file this with the registrar of companies as well. So these are some of the key procedural requirements which is there in Rule 77 of NCLT Rules 2016. Moving further, now let us see some of the additional insights. I talked about it may have some practical implications and the interpretation issues. First, let us see the interpretation issues. I have brought forward what is the proviso to section 131, and I said in one of the earlier slides that this may have interpretation issues. Let us see this. So as we saw, the proviso to section 131, which is listed here, it provides that the revised financial statement or the board report shall not be prepared or filed more than once a financial year. That's what we have seen it. Now let us see what interpretation issues may be there. In practice, there may be an ambiguity in the interpretation of the ability of the entity to revise. What do you mean by more than once? Let's take a practical case study, and then we will see here. See at the bottom. Now, when we say to revise the ability more than once, that more than once you can't do that. Whether the company can initiate more than one revision within the 3 preceding years or only one revision per year is allowed. Let us see this. If you see at the bottom, if you remember what we said, if you first look at these 3 periods, we said in the initial example set, we said you are in 2014-15. Now, In 2014-15, if the determination is done that you want to revise the financial statement or the board report, then any of the preceding 3 period you can do. Assume, let us say, for 22-23, the determination was made and the directors went ahead with the voluntary revision for 22-23 financial statements. Because this 22-23 was within the 3-year block in this year, right? Let us do 1 year fast forward. Now you are in 25-26. Now what happens? If you are in 25-26, now the 3-year window will be these, including the year which you have already revised in the earlier year. Now the question, the interpretation issue is this, that can you again revise this 22-23? You have already revised once. Or is it that once you revise 22-23, you can't revise this, only any of these 2 years is what you can revise, for which the determination can be done in 2015-16. This is an interpretation issue, not specifically dealt with in the standard or in the act. So one thing, however, is very clear. This is very clear. However, what seems to be very, very clear is that irrespective of the frequency, whether you can do it once or twice, as long as you are within that window of the 3 years period, irrespective of that, revision permitted only one revised report or financial statement can be prepared or filed in a financial year. That means whether it relates to this period in 24-25, only one revision can be done. Likewise, in 25-26, only one revision can be done. This is certainly beyond doubt. This is a very, very clear requirement. Now, the interpretation issue was this, that having already revised 22-23 based on the decision taken in 24-25, can you again revise this year in the next year? That is the question which is not very clear, and it creates interpretation issues. The last slide for today's discussion is, as I said, that the quantum, what is the type of correction which can be done? I have brought forward the subsection 2 of section 131, wherein we said that in these circumstances, in these 3 cases, when the financial statement have already been sent out to members or delivered to the registrar or laid before the company in the general meeting, then revision must be confined to what corrects the non-compliance with section 129 and 134 and any consequential alterations. Therefore, it seems to indicate that this particular section deals with 2 types of possible situations. The first situation is this, wherein that the revision of financial statement is you are contemplating after the financial statements have been circulated to the members. Or the second scenario is that after being signed off by the directors and auditors, but still you have not circulated it to the members, as is being mentioned in subsection 2 of section 131. Now, if you look at this bar only relates to this type of situation. Therefore, if you look at, if you have the scenario wherein the revision of the financial statements have already been circulated to the members, then this will get triggered. That means in this case, revision must be confined to only correction of those non-compliances which are of section 129 and 134. This relates to the financial statements, this to the board report, and any consequential changes, because this is the bar which comes from subsection 2 of India of section 131 of Companies Act. But in these circumstances, where the financial statement have been signed off by the directors and auditors, but have not yet been sent to the members, if it has not yet been circulated, apparently one can read, it may imply that apart from making corrections for these 2 sections, the company may be permitted to carry out other revision or modifications, say for example, bringing in new disclosures or application of a new accounting policies, as long as, of course, these do not violate the requirements of these 2 sections, as the case may be. Okay, that's exactly I wanted to cover for this particular video. I hope this is something which is useful to you, wherein I have tried to also bring in additional insights and not just what the law is in terms of the interpretation of of these provisions and the rules. That's what I wanted to cover. And also for your benefit, I have also kind of summarized the key topics for which you can see the videos on my channel. This is, of course, if you scan any of these QR codes, you will be able to directly open the video which relates to the particular area. This is the link of my YouTube channel. This one is on material accounting policies. In the S1 related discussion, what are material accounting policies? Then in the S8 related topic on, of course, the prior period errors, which we kind of concluded today with the the last video on the Companies Act side as well. Then change in the definition of accounting estimates. That is something which is given in this video. Likewise, the whole lot of discussion is there, which is on India 16 and India 37, dealing with decommissioning liability, and if an entity has made net zero commitment, do you need to account for it as required in India's 37 or IAS 37? Those videos are also there on the channel. Also, in terms of BEPS Pillar 2 rules, because of BEPS Pillar 2 rules, if an entity has top-up tax liability, what are the accounting and reporting implications of such top-up taxes arising out of BEPS Pillar 2? This is something which is being covered as part of the deliberation on India's 12 related videos. The whole lot of discussion is there on the financial guarantees. Financial guarantee accounting under India's 109 and the newly notified standard India's 117. How to deal with it. An exhaustive discussion covering in multiple videos are covered on this financial guarantee accounting. Then also on financial instrument side, supplier financing arrangement, the new requirement which has come in terms of what amendments have come under IFRS 7 or India's 107 and the cash flow standards. Also, de-recognition of your financial liability when when electronic cash transfers are involved. For example, say international transactions. Let's say your overseas vendor, you make the payment through electronic cash transfer, and it takes few days for the transfer to get accomplished when the money gets credited in the bank account of the overseas creditor. Now, in that case, what is the point in time? Do you recognize that payable on the day you initiated the international bank transfer or the day the money gets credited into the bank account of the foreign vendor? Now, this is a lot of debate which got generated, and that new guidance has been given by the standard setters. That is something which is also covered. Then if you have given employee loans at a rate of interest which is lower than the market interest rate, how the accounting has to go for. Likewise, on the transfer pricing side, the profit split method, which is increasingly gaining popularity, right? How this profit split accounting is operationalized. This is something you will not find too many kind of a literature with the illustrative case studies. Is something which I have tried and attempted to give you a perspective on how to apply this method. Also, base erosion and profit shifting, Pillar 2 rules, the key requirements of Pillar 2 rules, then BEPS Action Plan 4 on interest limitation, and how India reacted to that recommendation on BEPS Action Plan 4 by introducing Section 94B under the Income Tax Act. Also, from an ESG perspective, what is Scope 1, Scope 2, Scope 3 emissions? As an accountant, we need to understand what these emissions are all about, how one need to differentiate between them. All of these are there on the channel, and of course, many more to come. I hope you are liking the content which I have started developing over the last 6 months or so. This is the link of my YouTube channel, and this is my LinkedIn page. Please do connect with me, subscribe to this channel, do comment on this in terms of any specific requirement which you have. I will try to accommodate, maybe come out with whatever topics which you need, okay, from your perspective. Put it in the comment box. I will try to come out with video on that particular topic as well. So this is what I wanted to cover. Thank you for paying attention and take care. I will see you in one of the next videos. Thank you. Bye for now.